Good afternoon and welcome to GrainTV. It's June 14th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip. See how the grain's traded here on a Friday to end the week. As you can see, a little bit of a mixed trade. We had old crop corn up 11.5 cents. New crop corn down 2 1/4. Old crop beans up 6 1/4. The new crop delivery trading down 2 1/4. A little bit of weakness out of the wheat market, down 4 3/4 in Chicago, off 7 cents in Kansas City. If you guys want live quotes over at your home or office, visit us at grainhedge.com and you can take a no obligation trial of the platform that we use here on GrainTV. You know, in general, Brock, today kind of the big story was that old crop corn market certainly showing a little bit of strength there. What was kind of your take on the action there?
Yeah, really leading up to the end of the trade, we saw a pretty quiet, low-volume trade across all the commodities, but corn on the old crop really took off towards the last part of the day, the last half an hour or so. We really accelerated to the upside. And I think really what was driving that market was some information that was released from the Rosario exchange in Argentina. Basically what they're saying is that farmers are agreeing to halt selling into the cash market between Saturday and Wednesday of next week. Basically that's causing some concern for the Chinese right now as they're looking to get some shipments to them from Argentina. We know that there are some vessels backed up along the coast of Argentina right now trying to make their way over to China. But you know what we saw happen here domestically as a result is we saw the Pacific Northwest, the basis levels actually increased by about 12 cents late in the afternoon here today. So I think really that flowed over into the futures market and really put a bid under this market. If we take a look at a 5-minute chart here for the July corn contract, you can see this last about half an hour here of trade or so. We really accelerated to the upside, and I think that's the reason why we ended up about 11.5 cents here to finish out the week.
Certainly a big move there out of the Pacific Northwest, up 12 cents, and certainly a good indication that there might be some interest from China. So we'll keep you posted on that story here as we move into next week. In general here, let's take a look and see what changes we saw in the cash market over the last week. As you can see here, this is for spot corn basis, and we saw corn up 2 cents on average across the U.S. last week. We saw a little bit of strength out of the ethanol sector, certainly continued good crush and production from ethanol facilities helping keep that basis up. We saw a little bit of relative weakness out of the river market. Certainly old crop corn exports right now, particularly going out of the Mississippi, have not been particularly strong. So ethanol respectively stronger than corn. Taking a look here at soybeans, we did see the soybean market off 3 cents here on average just over the last week. And in soybeans, we did see basis levels lower in general across the week, but we did see some crushers and some river terminals bid up basis a little bit, really in an attempt to try to get some bushels out of farmers' hands. Right now, farmer selling has not been particularly strong. And the basis recovery was especially strong in some areas across the upper Mississippi, and we're still seeing spot basis up there between 10 and 15 cents above the July contract. So as you can see from the map here, a little bit of relative strength there along the upper Mississippi. Some river markets up there might present some good marketing opportunities there in your local cash market.
You know, Logan, that's kind of what we're seeing towards the end of the week here. Next week, early on, we're going to get the NOPA crush numbers on Monday morning. Why don't you take us through what the analysts are expecting?
Yeah, absolutely. Well, take a look here at this chart. You can see that in Wednesday's WASDE report, we did see the USDA once again revise higher their expectations for the 2012-13 soybean crush. And certainly that's been something that's kind of continued to support the soybean market. If you look back here in the WASDE reports that we got in May or June of 2012, things were running, or the USDA was expecting a relatively strong crush. As prices moved higher, they slashed that quite a bit, but it's really recovered here quite well over the winter. If we take a look here, though, at what expectations are in particular out of tomorrow's NOPA crush numbers, the trade's expecting 118 million bushels crushed during the month of May. That will be the lowest number that we've seen since September 2011 if that number does come through on Monday. But I think the bottom line here is that in general, expectations are for soybean crush to remain relatively strong here. Certainly the USDA confirmed that in their numbers on Wednesday. Bottom line, we're going to have to wait till that report comes out on Monday. That should be giving old crop soybeans some direction. In general, though, I think for the new crop contract, certainly crop progress and conditions are going to be important, and that will be coming out on Monday afternoon. We'll keep you posted on both those reports, coming into them on Twitter. At GrainTV is where you can find us over there. In general, though, that's kind of what we saw here for a Friday in the grain market. Thanks a lot for joining us on GrainTV. Have a great weekend. We'll see you on Monday for the NOPA Crush Report.